welcome back to another episode of the Bookkeeping Experts. We're here to talk about QuickBooks Online, and today we're going to talk about the balance sheet. Last time we talked about the profit and loss and how to use your profit and loss to analyze your current accounting position or your current financial position. Today we're going to talk about the balance sheet. The balance sheet is more like a long term. That's going to analyze your liquidity, means that if you were to liquidate all your business today, what is your net worth? What's your business net worth? And that's what the balance sheet will analyze for you. All your assets and all your liabilities and equity. What's your bottom line? Okay, without much further ado, we're going to go into QuickBooks Online and take a look at that report. All right, here we are, QuickBooks Online. To get to reports on the left-hand side, click on reports. And I have the three most important reports here already selected. And that's four. That's our accounts receivable aging summary to find out if your clients are paying on time, your balance sheet, your statement of cash flow, and your profit and loss. We're going to take a look at the balance sheet here. And this is the standard balance sheet. There's a lot of things you can do here. Now, for the balance sheet, I'm going to start with this year to last month. You want to make sure that your reports are reconciled and all corrected before we get to here, but you still may find a few things that may be off. Obviously, this is a simple account. The information here is not necessarily correct. So the first thing that I would take a look here is the balance on each bank account, and I have a couple of bank accounts here with a negative amount. What does that mean? That means that we have expense, but we don't have the income recorded here, and most likely this information is not correct. How to correct that? Reconcile the account, and how to verify if the account was properly reconciled. You can take a look at the register. So we're going to go here, transaction, chart of accounts. We're going to go ahead and go into the register, view register. Okay. And if your account is reconciled to a certain date, you want to select the date, the last date of that it was reconciled. So you click on this little funnel over here, and don't put anything on the date from, but on the date to, you're going to put the date of the last reconciliation. Put January 31st. Okay. And on the reconciliation status, you click on the arrow and you want to select not reconcile. And that means that it was reconciled correctly. But if there is anything left, it can mean two things. One, the account was not reconciled correctly, because at the end of the day, you want to make sure that all transactions are reconciled. If there's things that have not been reconciled during the period that you already reconciled, it's probably because either it didn't clear until the following month, and that's okay, or it's a duplicated transaction, or it was recorded into the checking account but it didn't clear, or it was not matched. So things to look into. We have videos on how to eliminate duplication and so on and so forth. So take a look at that. So this is how we check if the reconciliation was done correctly. And you want to make sure that the balance here will match whatever you have on your statement, except if the statement closes at a different time of the month. Then you want to make sure that you run the report for whatever date that the statement actually closed. Your accounts receivable. Okay, so if you have any negative amount on accounts receivable, or if it is too high, you want to take a look at what's in there. Okay, I don't have anything here, but if you do, if you click on the transactions right next to accounts receivable, it's going to open up with the information of all the accounts that is here. We have only one, but you see it was the invoice and then it was paid. It means that everything is good, because accounts receivable should be money in and money out, right? Because you want your customers to pay. If they don't pay, then you may not be in business for too long, so you want to keep an eye on those accounts receivable. Now, another reason why the accounts receivable might be high is because you're not recording the payments on your invoices and matching in the banking. And if that's the case, then you want to correct that. If it is for prior periods, you can eliminate those invoices, voided because the money was already accounted for. If it is for the current period, you want to fix that, and you can record the payment and match it in banking. I have a video about that, so check it out, especially if you already reconcile. I have one that you can fix your undeposited funds when the account is already reconciled. And you can also fix your accounts receivable because you can record the payment into undeposited funds and then go on the bank feed and select those transactions. But you want to make sure you match it, because if you don't match, you're duplicating your income. Don't want to duplicate your income at all. All right, so payments to deposit means undeposited funds. Undeposited funds should be whatever is in the undeposited funds should be transactions that have not cleared on the current period, because undeposited funds is money in, money out. We have a lot of videos on undeposited funds, and that's because there's a lot of errors there. People don't understand the workflow of undeposited funds. It is a very important account, and if you know how to use it, it makes your life a lot easier. It's regarding the workflow of QuickBooks Online and revenue. So first you're gonna record your invoice, then you're gonna record your payment once the customer pays, and you're gonna send it to undeposited funds, not to the bank account, and then you're gonna record the deposit into the bank account according to whatever was actually deposited and match that exactly. So you want to make sure you record those deposits that match exactly whatever happened in the bank. And I have a lot of videos on that. Oh, uncategorized assets. See, it's a negative amount. It means that something was categorized incorrectly. If you click, you're going to be able to see it. And of course, this is a beginning balance. So I would have to take a look at the account register and locate this transaction and fix it. Okay, with undeposited funds, you should never fix it with a journal entry. I always fix those transactions with the proper entry. So by matching, recording the deposit, or fixing it from the bank feed and associate or attaching the invoice or payments, not invoice but payments into that deposit. Okay, so another thing for you to keep in mind that happens a lot on the balance sheet is a negative credit card or a negative liability. What does that mean, Claudia? A negative liability means that you paid more than what you owe, and it means that you're not probably entering what was the principal of that liability. For instance, if you have a loan, if you haven't entered the initial balance or what you borrow in the beginning, you may see a negative amount. Or if you're not recording what is interest expense versus what's the payment, you may end up with a negative amount because it's going to show as overpaid, and you're not overpaying. You're probably not recording your liability correctly. All right, so very important part. And of course, it is important for you to reconcile your loans as well. Have you thought about that? You got to reconcile your liability account to make sure that everything is recorded properly. At the end of the year, you want to make sure you have all your deductions, your interest expense, and in order to do that, you got to record that. It's not recorded automatically. You want to take a look at your loan statements, and when you make the payment, you can split that payment between principal and interest, or you can do a journal entry and match it. Whatever it is, you want to make sure you break it down, whatever is principal and whatever is interest payment. Okay, and finally, equity. What do I have in equity? Okay, so opening balance equity should be 0, because opening balance would be like when you you open a credit card or when you close a credit card. When you close a credit card, you should zero out the account before you close it. If not, it's going to create a opening balance over here. And of course, when you link a credit card or a bank account, it's going to generate an opening balance as well. But you verify that many times you have to delete that because that balance is part of the current month's transactions. So you want to make sure that that opening balance equity is looked at and corrected if there is any. I like to go over the owner's draw or the personal expenses with my client, because a lot of times they may be making purchases. I think I categorize as owner's draw and it's correct, but they say no, this is actually a business expense, and we can change that. And what goes into owner's draw and personal expenses only expenses that are not related to the business. So even if it is a separate business and you're making, you have expenses on this business for another business, and there are two separate entities, that goes to owner's draw as well, or personal expense, or owner's equity. And that is because we want to keep the expenses from another business on another book, not here, right? Finally, you have owner's investment. Owner's investment will track what's your investments through the year, the money you actually put into the company, including when you pay for your business expenses with personal funds. So that's where it would be going. So we have personal expenses, which is the same thing as owner draw, but sometimes you may want to have two, and so you can separate what is really personal expense and what is owner's draw, such as maybe a different business entity or things like that. And finally, retained earnings. What is retained earnings? Retained earnings is your profit through your, not just your profit, but it's your net profit through the years. So it's accumulation of that net profit through the years. So retained earnings taking in consideration as well all your equity or your current liabilities and so on and so forth. All right, so hopefully this was useful. There's a few things you can do if you want to do a horizontal analysis of your balance sheet. You can click on the arrow next to display by column and do it by months, weeks, days, quarters. You can also do it by customers or vendors. So if you want to isolate, your, in this case, like your vendors, maybe to verify your liabilities, maybe, or maybe your customer for your accounts receivable and things like that. Okay, so very useful. Love to do the horizontal analysis. This way I can verify if there's anything here, especially if you're looking into undeposited funds, if there's anything that is getting out of whack. You can look at by month and then you can isolate right from here. All right, okay. Hopefully this was useful. And of course, one more thing, you can customize. Look at this. If you click on customize filter, you can filter by customer, vendor, or products and service, so that you can look specifically at your maybe accounts receivable or accounts payable, and be able to analyze that just specifically. You don't have to, but here it is. Okay, so this information can be key for you to understand what's your business, the picture of your business, what's the bottom line. So we're going to talk about the statement of cash flow next time. But today we are done. Let's go back here. All right. Okay, hopefully this was useful. And if you think it was useful, please subscribe to our channel. It helps us a lot. You have no idea. Just a small percentage of you subscribe to our channel. If you like our content, we work very hard to bring the best and most updated information to you, so to make your life easier. And if you're a business owner, take your business to the next level. If you're an accountant or bookkeeper, stay up to date with what's going on and learn tools that will make you more efficient in what you do. Now, subscribe, share with your friends. If you have any questions, write down below. We're going to get back to you right away. I promise you. And I'll be back here. I'll be back here in just a few days. Until next time, you keep on smiling.